Asian markets decline, led by a significant drop in China's CSI 300 index. The AI race intensifies as Foxconn prepares to build the world's largest chip plant, and we explore the impact of illegal mining in Ghana and its devastating environmental consequences. Hello, I'm Toba Aiden with the latest business and finance news here on TRT World. China's stock markets faced steep declines on Wednesday as investors reacted to mounting concerns over Beijing's latest economic measures. As Asian markets tumbled, attention turned to global central banks and the volatile oil market, with traders eyeing upcoming policy decisions. China's CSI 300 index plunged 5.3%, its biggest daily drop since 2020, wiping out recent gains. The sharp decline reflects growing investor concerns about the country's economic policies and global market conditions. The Hang Seng index in Hong Kong fell by as much as 2.5%, extending losses after Tuesday's 9.4% slide, the worst in 16 years. Investors continue to feel uncertain, with Beijing's economic measures failing to boost confidence. On Tuesday, China's National Development and Reform Commission announced a $28 billion stimulus package, far below the anticipated $410 billion, leaving markets disappointed and driving further volatility in Asian equities. Amidst the turmoil in Asian markets, US stocks gained, with the S&P 500 rising 0.97% and the Nasdaq up 1.45%, supported by oil prices, which dropped 4.6% as geopolitical concerns moderated. For more, let's bring in Li Xingan in Kuala Lumpur. She's a financial market strategist consultant to XNES. Good to have you with us, Li. Now, what are the main factors behind the sharp drop in Chinese stocks?
Yeah, thank you so much for having me. Right, so the recent decline that we see in the CSI 300, I think that could be attributed to a few factors. Right, one, it's that investors are increasingly skeptical about the effectiveness of these stimulus measures, right, especially after the recent policy meeting that we saw lacked specific details. So the disappointment among traders were in hope of stronger action that were being seen, right, led to this decline. Right, additionally, if we take a look at the holiday spending, right, in the Golden Week, the holiday spending data actually indicates that the rebound in consumer confidence, it's not there, right? It's still quite fragile, and that is also crucial for the economic recovery. So we're also seeing some profit taking, especially after the significant rally that we saw in the CSI 300, and also concerns that this might be overextended. So I think all these elements actually combined created this reversal that we're seeing in the index.
Now, what about this fiscal stimulus package? How significant is it? And it doesn't seem to have boosted investor confidence much. Can you tell us more about that?
Yeah, absolutely. Right. So I also agree that I think that more needs to be done in terms of how we can restore market confidence. Right. So as you've mentioned, right, the NDRC recently announced the fiscal stimulus measures, but it came short of investors' expectations. Right. So I think that apart from that, right now what we are seeing here, right, suggests that this consumer confidence, it's probably it's not enough, right? It's not as strong as markets hope for, and also this lack of specific or concrete details in the fiscal stimulus measures would also weigh on sentiment.
And how are global markets, including the US, reacting to the turmoil in Asian equities?
So I think the turmoil in Asian equities, interestingly, also coincided with the rebound in the dollar index from this year's low, and part of it is also a reflection of this risk aversion that we're seeing in the markets. But for the US index itself, it has moved higher, but I think in terms of the gains that we could be seeing, right, part of it could be also limited by shifting expectations of Fed rate cut. We saw that especially after Friday's non-farm payroll data. So the US jobs data actually did much better than expected. So that also shifted, or rather trimmed expectations for a 0.5% Fed rate cut in November. So I think the more gradual pace of easing by the Fed could also temper that upward momentum in the global markets.
And we're also seeing quite a bit of volatility in oil markets. What role are geopolitical tensions playing in that?
So I think that geopolitical tensions definitely have contributed to the recent rally in oil markets, but we saw that that actually tapered down slightly, right, in terms of the upward momentum. I think the primary focus right now is still on the stimulus measures in China, right, as to whether that can actually sustain the rally in the Chinese equities or in general market sentiment, right. Apart from just the political tensions in terms of supply concerns, right, the recent data actually highlighted a 10.9 million barrels increase. So I think that could also help to ease supply concerns in the near term. So I think a big part of the focus, apart from just geopolitical tensions, would also be other factors. For example, the crackdown that we are seeing in Google. So that could also impact market sentiment and lead to the general uncertainty.
All right, Li Xingan, we will have to leave it there. Thank you very much for your analysis.
Thank you for having me.
Now, a quick look at some of the other top business stories from around the world. Boeing has withdrawn its contract offer for 33,000 striking machinists, halting aircraft production since mid-September. The union rejected an improved offer, saying it wasn't properly negotiated. Talks broke down again this week, with the strike expected to cost Boeing over $1 billion a month. The S&P Global Ratings has issued a negative outlook for the company's credit ratings. Elon Musk's social media platform X is back in Brazil after its ban was lifted by the country's Supreme Court. The platform was suspended in August for not complying with court orders to ban certain accounts and remove harmful content. Brazil's court stated that X met the conditions set by Justice Alexandra de Moraes, allowing the platform to return. During the suspension, competitors like Blue Sky and Threads gained millions of users in the country. Shares in Trump Media surged nearly 19% on Tuesday, marking 4 days of gains. The stock reached $22 apiece, significantly higher than its recent low, with trading volume tripling. The rally followed Donald Trump's campaign event in Pennsylvania and endorsement from Elon Musk. This comes despite recent executive resignations at the company. And Hyundai Motor India has set a price range of $22 to $23 for its $3 billion initial public offering, opening next week. The IPO will be India's largest and values the company at up to $19 billion. Employees will get a $2 per share discount. Hyundai is India's second largest car maker with a 15% market share and plans to increase production with a new plant by 2026. Foxconn has set its sights on building the world's largest manufacturing plant for leading chipmaker NVIDIA. The plant will produce NVIDIA's GB200 superchips used to power supercomputers to tackle advanced AI tasks. Emre Boz has more.
Artificial intelligence, a technology meant to perform or even outperform jobs that normally require the human mind. And at the core of AI technology are superchips. Many companies are racing to see who can produce them to make AI applications even better. And leading the race is chipmaker NVIDIA, working with the largest electronics manufacturer Foxconn to build its superchips.
AI key components, AI key modules and boards, AI server and rack, high-performance switches, AI data center. Foxconn will be the first to ship these superchips.
Foxconn has set its sights on Mexico to build the world's largest chip manufacturing plant for NVIDIA. The goal? To manufacture and expand the production of NVIDIA's GB200 superchips. NVIDIA says it expects several $1 billion in revenue from these chips in the fourth quarter of this year.
We're building the largest GB200 production facility on the planet.
These chips, built specific for AI tools and technology, are at the core of automation. As these chips become better, so too will the efficiency in these companies to build faster and cheaper chips, reinforcing a cycle of productivity.
artificial intelligence makes business sense. AI is embedded in automation. Automation is productivity. Our customers told us they want to see more automation. This is an almost one-fold increase in productivity when automation is deployed in our factories.
There are fears that as AI gets better, it may put more and more people out of jobs. Goldman Sachs says that roughly 2/3 of US occupations are exposed to some degree of automation by AI. And globally, they say at least 300 million jobs will be automated. But for now, as AI technology continues to make giant strides, the profits will continue to climb for companies like NVIDIA. Emre Boz, TRT World.
Let's get more on this now with Mark Humphrey-Jenner. He's an Associate Professor of Finance at the University of New South Wales Business School. Welcome back to the programme, Mark. Now tell us, what makes NVIDIA's GB200 superchips crucial for advancing AI technology?
Well, firstly, thanks for having me. And NVIDIA has been continually improving its AI chips, and it's to some extent a bit of a horse race to try to come up with the most effective, most productive, and effectively most cost-effective chips to be able to roll out. Now, part of the reason this has become so vital is due to the sheer amount of AI utility out there in industry. We're seeing AI proliferate through things such as large language models, through to medical imaging, through to almost anywhere that we're seeing. Most companies, for example, have rolled out access to GPT-related corporations and services, for example, to improve software engineering and to improve the speed with which workers are doing things. So this is the latest step toward really ramping up this. And one of the interesting things here is this is being manufactured in conjunction with Foxconn, which is most known for manufacturing a lot of Apple products. So there appears to be, at least Foxconn, really increasing its footprint in the AI ecosystem. Because Apple certainly has been trying to at least allude to additional AI, which is referring to as Apple Intelligence, but AI within a lot of its items as well. Certainly it's taken off and increased a lot of productivity.
And how will Foxconn's new plant in Mexico impact global AI chip production, particularly in light of recent tensions between the US and China?
The latest production plant being set up in Guadalajara in Mexico certainly is consistent with the nearshoring or friendshoring type idea, i.e. doing manufacturing much closer to home. Now, this really peaked or caught off during COVID era, where supply chains necessitated a lot of this. However, what we've seen recently is with currently President Biden, but also President Trump, there's been a shift toward getting more companies to do more operations and more production closer to home. Now, manufacturing in Mexico probably isn't likely to solve the total tariff problem that NVIDIA might otherwise face. So NVIDIA might also want to be considering, in the not too distant future, doing some manufacturing in the United States, but it certainly is going to be less exposed than, say, manufacturing these things hypothetically in China. So certainly it's helpful from that perspective, helpful from a supply chain perspective, maybe helping to alleviate some tariff pressures, although I do suspect that the nearshoring is probably more prominent than tariff concerns in this specific factory.
And how would automation driven by AI superchips improve productivity in industries, particularly in the US?
Productivity certainly increased quite monumentally. Now, there's reports, there are different reports across different industries about exactly how much additional productivity has come across. Because, for example, say we're looking at software engineering, well, there's been a significant increase in productivity because things such as GPTs enable people to really access codes and commands and programs that they perhaps didn't have at the front of their mind. If we're looking at areas that are adjacent to coding, so I'll give you an example. In academic research, it's dramatically increased productivity because instead of having to memorize and be very familiar with things such as Python code or going out and getting a research assistant to do so, you can now use ChatGPT to come up with a lot of that code yourself, saving both significant time and money. And it's been reported this saves people many, many hours, potentially at least half a day a week for many of these industries that would otherwise have needed to either ask other people for help or research what to do themselves. But there is a lot of heterogeneity. There's also a question about how those gains, those productivity gains, are going to be shared between workers and the corporation, with reports that many workers are, in some ways rightly, pocketing those efficiency gains. So the corporation is not necessarily gaining more, rather the employee is working less because they've now been able to perhaps take off some of the mental load, enabling them to reclaim some work-life balance.
All right, interesting analysis there, Mark, Humphrey, Jenna. Thank you very much for joining us.
Thanks a lot. Great being with you.
Now, in Ghana, people are risking their lives digging for gold. This mining, known as galamsey, is a booming business, but the price is high for the diggers and for the environment. Malik Fuda has the story.
In Ghana's forests, miners dig through muddy water hoping to find small pieces of gold. This illegal mining, called galamsey, has grown fast. It helps people make money, but it also causes serious harm to the environment and the miners themselves. And despite all the risks, the rising price of gold this year has pushed more people to turn to this dangerous work.
When I started mining, I made more than $5,000. So I got in and I took boys, and we started doing the galamsey.
The effects of galamsey go beyond the gold. Hazardous chemicals like mercury are polluting rivers, making water unsafe to drink. Scientists say 65% of Ghana's water sources are now contaminated. Large areas of forests and cocoa farms are being destroyed by this illegal mining. The gold industry is also linked to the crime. Around 80% of these small mines are unlicensed.
Potentially 70 to 80% of gold miners are not licensed. So it's an industry that is very informal and it makes it easy for organized crime to get involved.
While galamsey provides income for some, it doesn't help Ghana's economy. Most of the gold is smuggled out, so the country doesn't see the benefits. People often do trade under the table.
There can be, for example, differences in the invoicing between exports and imports. So the volume of gold reported to be exported out of Ghana is not the same amount up to the countries where it's going to, like Dubai. So there is a discrepancy between the volumes, demonstrating that there is smuggling involved and there is perhaps money laundering because there are differences in the data.
Ghana's wildcat gold mining is putting both the environment and the health of its people at risk. The government says it has tried to stop it without success. Meanwhile, miners are chasing gold, but the costs are high, and the damage may take years to fix. Malik Fuda, TRT World.
For more, I'm joined by Paul Frimpong, who's a global economic and investment analyst. Thank you very much for joining us on the program, Paul. Now, what's driving so many people in Ghana to engage in illegal gold mining despite all the dangers?
Yeah, thank you very much. I think, since Ghana became a gold mining country, which is dating back over 1,000 years now, we've had a series of regulations that, guides the country's gold mining, which now we have two major categories, the artisanal and small-scale mining. We have the large-scale mining. The obvious reason for the rise in illegal mining, as you've seen now, of course, is very economical, because when you track most of the mining regions that we have in Ghana, there's a lack of economic activities there, which is more linked to unemployment and, of course, poverty levels. So making the mining, the gold there, becoming a very attractive source of livelihood because they don't have alternative source of livelihood. So I think it's economic reasons, one of the reasons why we are seeing the rise in illegal mining activities in Ghana. And of course, it's not also limited to that. As we can see, because of the licensing regime that we have, the level of bureaucracy that we have, the political expediency that is being practiced there, the lack of commitment, political commitment that we are not seeing, of course, all these are contributing. But the core of it, as I said earlier, is for economic reasons leading to the activities that we are seeing in Ghana as at now.
And how has the recent rise in gold prices impacting the growth of galamsey mining in operations in Ghana?
there's a positive correlation between the rise of gold prices and, of course, illegal mining activities, not just in Ghana, but across all parts of the world, because it's become a very incentive source of revenue, looking at the cost of living, looking at the rising inflationary levels. I mean, it becomes very obvious that people will then want to dig deeper, as we are seeing now. This year alone, gold price has risen almost 30% and is expected to even go deeper, rise higher even in 2025. So we see that the rise in the gold prices in the world market is actually fueling and, of course, incentivizing more people to even get themselves deeper into the illegal mining space.
All right, for Paul Frimpong in London, we will have to leave it there. Thank you very much for your analysis.
Thank you for having me.
In the past year, boycott movements aimed at Israeli and global companies due to the war in Gaza have heavily affected various businesses. Many companies, from fast food brands to technology firms, are closing stores, facing major financial losses and reducing their workforce. As Israel continues its attacks in the Middle East, these economic pressures are anticipated to intensify. Omar Bakalolo reports.
Consumer boycotts have long been a crucial tool of resistance. During the apartheid era in the 1980s, they were used effectively to hit the South African economy, helping to force change. Now, that same strategy is being deployed again in response to Israel's war in Gaza. Over the past year, protesters across the world have been using their power as consumers to put pressure on multinational businesses with ties to Israel.
This is a duty for all of us as an Arab nation, as Muslims, and as any human being who calls for freedom. We must boycott these companies who support the Zionist entity in a big way.
The campaign, known as Boycott, Divestment, Sanctions, is a Palestinian-led movement that put pressure on Israel to adhere to international law. BDS calls for strategic boycotts, focusing on specific brands, and it's quickly gained traction. It's not just limited to Muslim-majority countries. Countries across Europe and in North America have seen protests and social media campaigns.
We need boycotts, divestments and sanctions now, and we need governments to listen. We can't continue with this complicity whilst innocent civilians continue to die, continue to be injured, and continue to lose loved ones.
Since the war in Gaza began in October, the multinational brands have seen a sharp decline in market share, particularly in the Middle East. McDonald's became a prime target of the protesters after its Israeli franchise offered free meals to Israeli forces. That's led to an 11% fall in the fast food chain's second quarter net profit. Yum Brands, known for its investments in Israeli startups, posted a 12% fall in second quarter earnings. Last month, Starbucks replaced its CEO after a 7% fall in quarterly earnings. The coffee chain has been faced boycotts after suing its union for posting a solidarity message for Palestine. Coca-Cola and Pepsi have been hit particularly hard, losing ground to local competitors in countries like Turkey, Pakistan, and Egypt.
The consumption of Coca-Cola and Pepsi has decreased a lot. And as proof to that, Coca-Cola only used to have offers during Ramadan, campaigns like buy 4 to get 1 free. But in August, it unveiled a similar campaign, which is proof that due to boycott, the consumption is declining.
Last week, Coca-Cola also announced that it's closing 5 production and logistics sites in Germany, the latest evidence that boycotts are hurting its business. As consumer activism grows stronger, many global businesses are being forced to reconsider their strategies. Ömer Bakkaloğlu, TRT World.
Well, that's all your business news for now. Thanks for watching.